If you weren't able to get inflation up as unemployment fell, what makes you think you can do it now?
Well, I think we need to maintain an accommodative stance is what this really tells us, and we need to focus on getting inflation up. I don't think we should be overly focused on the unemployment rate being low and, oh, isn't that a concern? I think it's a good thing. I think it's consistent with a strong economy. I think that if there are financial instability concerns that you might be worried about because of low interest rates for a long period of time, you need to make a judgment as to what neutral rates really are and whether or not we've got the appropriate regulatory environment in place. I think we do. I think that after Dodd-Frank, we've got banks with more and better capital. I think that the Board of Governors and other federal agencies have been looking at whether or not there are ways to make modest adjustments so that we can continue to expand credit intermediation in a productive fashion to keep the economy going in a natural way. I think those have been good actions, and so I think we're well positioned.
Well, it brings us to the policy review. You're about a year into it. Maybe June is when roughly the chairman has suggested we'll get some results from it. Where do you think it ends up?
That's a great question. We've had a lot of good discussions. I think that we've benefited by focusing on, what do we really mean when we say maximum employment? How should we be thinking about unemployment rates, how people are benefiting in a strong labor environment? Is that something that we need to push against if we're concerned about inflationary pressures, but we haven't seen inflationary pressures? And so I think we need to clarify what we mean by symmetric inflation objective. We've been underrunning our 2% objective for, well, pretty much as long as we've announced that 2% was our objective back in January 2012. So I think we need to overshoot. I think we need to not be concerned about inflation, even if it rises up to 2.5% on a sustained basis. I think we need a framework that acknowledges what is acceptable in a much more explicit fashion. I think there's a bit too much artfulness to the way it's described now.
Well, it sounds like you're kind of with the majority of the committee that would probably do something with inflation averaging, one of the ideas for doing something like that. Would you agree? And what about the idea of changing the target to a range?
So I think these are all options that, we've discussed a little bit. We need to make some judgments about what is most effective. I think that coming up with a pretty clear explanation of what we mean by symmetry is very important. If a range is helpful for that and we can articulate how we would respond to different inflation settings within the range, I think that's what's really important. And averaging could be a component of that, but I think at some point you need to be able to explain to the public why you're comfortable with inflation at 2.25% to 2.5% when you say that 2% is your objective. We seem to be able to explain that we're comfortable with 1.5% inflation as long as we're aimed upwards. I think we need to be a little more clear about that.